The Fed has reaffirmed its dovish stance this past Wednesday, causing gold to climb higher. But has resistance finally been broken? Joining me now from the floor of the CME is Phil Streible, senior market strategist over at RJO Futures. Phil, good to see you. Welcome back.
Yeah, thanks for having me.
So let's talk gold here, Phil. The metal rallying after the Fed meeting. Was this simply due to the lower dollar?
Well, at that point, we saw a lot of people take positions off coming into the Fed meeting. I do even think some people established shorts below the $1,300 level, but I think those are real weak shorts at the moment. I think as gold futures start to come up, now with the dovish commentary and without the Fed, indicating they're going to raise rates at all this year, I think gold prices now could start to trend higher.
Okay, so what would be the key level for you now? What is the game changer level, Phil?
1325 is, I think, such a key level in the market. We saw a fail up there, 1320, that's also another level, but I really think 1325, we break through there. I think there's a good shot that we move up to that next resistance point at 1350.
All right, but as you know, we've seen similar patterns before when gold rallied after a Fed meeting. So, why should we think this time could be any different?
Well, I mean, the Fed really changed its stance. I mean, if you look just back like last December, they were indicating 3 interest rate hikes in 2019. Now that's come completely off the board. So, with that being said, I think that clears the way, and it also puts almost an invisible level of support on gold down at like 1290. I don't think if we get below, if we get anywhere close to 1290, I think that there's some bigger picture that's out there. Most likely something like a U.S.-China trade deal. If that goes back into effect and they do resolve the trade deal, you could see growth come back into the market. And then as the meetings progress, the Fed could change its stance back to more of a hawkish view. So I think there's a little bit of concern over that, but I do really like the way gold's set up right now, and I do like the way the Fed kicked it off to us.
All right, so with the momentum behind gold, will this spill over into silver?
Man, I hope so. I really love silver a lot. In silver, it was hanging on to that 200-day moving average, 1530. We did push up to 1550. I don't want to see silver back below $15 in any case, but I think like 1620, I think those are longer-term targets back on silver. We really need some other, of the metals kind of maybe to pull back a little bit as far as like platinum and palladium. I think palladium's stolen, a lot of people that normally trade in the silver market.
I'm happy you brought up palladium because that's my next question. I'm getting so many questions regarding, is it just too high to get in here, or is there still a lot more room to run here?
Do you know how many times I've heard that question? And I mean, look, when it was at 1200, 1300, I do have a lot of people that had jumped into that market there. It's important to trail a stop, have a risk management strategy in there, but there's no question on how high it could go because of the fact that there's limited supply and it's controlled by Russia, and what little comes out of South Africa is questionable at best. And with the new regulations on catalytic converters and fighting pollution, there's a true demand for palladium. And I tell you this, I could still, living in Chicago, I could still hear people's catalytic converters getting sawzalled off in the middle of the night, which is shocking.
So 1800 palladium not out of the question?
Definitely not out of the question,
right.
And even 2000.
Well, I start getting nervous when my neighbors start asking me about palladium. So Phil Streible.
That's how Bitcoin was, remember.
Exactly. Phil Streible, thank you so much.
Okay, thanks for having me.
And thanks for watching. We'll be back tomorrow.